5 trillion move is quietly changing America. Introduction. What if I told you that a 5 trillion shift is happening right now in America? Not in the stock market, not in Silicon Valley, and not on the front page of the news. Yet this movement could affect where jobs are created, where money flows, how businesses grow, and even how ordinary Americans build wealth over the next decade. Most people haven't noticed it, but Wall Street has, major banks have, institutional investors have, and some of the world's largest funds are already positioning themselves for it. The question is, what exactly is this 5 trillion move, and why could it change America's economic future? Let's find out. Chapter 1. The End of the Easy Money Era. For more than a decade after the 2008 financial crisis, money was cheap. Interest rates stayed near historic lows. Companies borrowed heavily. Investors searched everywhere for higher returns. Governments expanded spending. Businesses grew accustomed to easy access to capital. Then everything changed. Inflation surged. The Federal Reserve raised interest rates aggressively. Suddenly, borrowing became expensive. Debt that once looked manageable started becoming a serious burden. And that is where the story begins. Across America, trillions of dollars in loans, bonds, and corporate debt are approaching refinancing periods. The environment they were created in no longer exists. Companies that borrowed at 3% may now face refinancing at 7%, 8%, or even higher. This creates both risk and opportunity. Chapter 2. Where the $5 trillion is going. When interest rates rise, money doesn't disappear, it moves. Capital begins searching for safer and more profitable destinations. That's exactly what's happening today. Large pension funds, insurance companies, private equity firms, asset managers, they're reallocating enormous sums of money. Not millions, not billions, trillions. Some estimates suggest that over the coming years, several $1 trillion could shift toward private credit, infrastructure, energy projects, data centers, and other long-term investments. Why? Because investors want predictable cash flow. They want protection from inflation, and they want alternatives to traditional stocks and bonds. Chapter 3. The Rise of Private Credit. One of the fastest growing areas is private credit. Historically, banks handled most business lending. Today, that model is changing. Private funds are increasingly stepping in to provide financing. This market has grown dramatically. Companies that once depended on traditional banks are finding capital elsewhere. For investors, this creates a new source of income. For businesses, it creates new opportunities, but it also shifts power within the financial system. And that's why many analysts believe private credit could become one of the defining trends of the next decade. Chapter 4. America's Infrastructure Boom. Another destination for this capital is infrastructure. America faces massive needs in energy, transportation, manufacturing, digital networks, artificial intelligence infrastructure. Building these systems require enormous investment, and investors are eager to fund projects that generate long-term revenue. Think about data centers. AI requires huge computing resources. Every new AI breakthrough increases demand for power, servers, and infrastructure. That means billions and potentially trillions of dollars flowing into physical assets. Chapter 5. Why this matters to ordinary Americans. You might be wondering, what does any of this have to do with me? The answer is quite a lot. Capital flows shape the economy. They influence job creation, wages, housing markets, retirement accounts, investment opportunities. When trillions of dollars move toward a sector, that sector often experiences growth. New companies emerge, existing companies expand, workers are hired, communities develop around those investments. The effects ripple throughout the economy. Chapter 6. The risks nobody talks about. Every major shift comes with risks. Higher interest rates create pressure. Some companies may struggle. Defaults can increase. Financial markets can become volatile. And if too much capital crowds into a single trend, bubbles can form. History shows that not every $1 trillion opportunity delivers as expected. Investors who chase headlines often arrive too late. That's why understanding the fundamentals matters more than following hype. Chapter 7. The Winners and Losers. Every economic transformation creates winners and losers. Potential winners may include infrastructure firms, energy providers, data center operators, private credit funds, technology enablers. Potential losers may include highly leveraged businesses, companies dependent on cheap debt, firms unable to refinance effectively. The challenge is identifying which organizations can adapt to the new environment. Conclusion. The biggest economic changes rarely arrive with flashing lights. They begin quietly. Money starts moving. Investors reposition. Industries evolve. And only later does the rest of the world realize what happened. The 5 trillion shift taking place today may not dominate headlines, but its impact could shape America's economy for years to come. The people who understand these changes early are often the ones best positioned to benefit from them. So the real question isn't whether this shift is happening. The real question is, are you paying attention?